Industries that are hot, sectors set to outperform the market. That's what's here in Zacks Industry Rank Analysis. Which industry or sector are we going to zero in on today? Well, we'll tell you in a couple of seconds. We've got Charles Ropelet here, a senior market analyst for Zacks.com. Actually, he told me just a couple of seconds ago. It's the retail sector that's on his radar for this week. And you make an interesting statement in your industry rank this week that retailers are one of the top-ranked sectors. And that's kind of curious to me because February sales are not expected to show a whole lot of improvement. You got retailers still closing stores, cutting mall hours, and firing people. So why is that?
There's two big reasons. A is the timing, and it really comes down to the Zacks rank. The Zacks rank is a quantitative indicator. Two of the things that factor into it are changes in earnings estimates over the last 60 days or so. The second thing is actually estimates change over the last 30 days. Since retailers generally operate on a February to January fiscal year versus a traditional January to December fiscal year, they report their earnings later than everybody else. So therefore, you look at a situation where they may have a positive earnings surprise. Estimates might be revised up slightly, but because of the timing of those estimate revisions, retailers get a little push up in the Zacks rank relative to everybody else, simply because you're looking at positive revisions happening within the last 30 days, say instead of the last, say, 40 days for a company that might have reported in early February. So it has to do with the indicator itself and how it actually ranks stocks relative to one another. We're also looking at retailers in general. Some of them have actually performed not as bad as other people had feared. Not necessarily good earnings, but relative to expectations, they were able to jump over those very lowered hurdles.
So does that mean that the indicator is telling us we're seeing light at the end of the retail tunnel?
No, it does not. And actually, when you look at the retail sector, we're still seeing more negative cuts than positive cuts across the board. Still some bad numbers. Even if we look at a company like Cracker Barrel, beat expectations, provided decent guidance, especially compared to what analysts were expecting. In its case, it actually held its guidance. Analysts had actually forecasted earnings would be below what the company had previously stated. So the mere fact that Cracker Barrel said, hey, we're holding on to their estimates, caused analysts to raise their estimates. From the Zacks rank perspective, that was very positive, gives us a stock as Zacks number 2 rank. But when you look at the numbers, particularly as everybody knows, Cracker Barrel, you can go there for food, but then you also have the small store with little tchotchkes, little jars, toys, clothing, etc. Those sales were down pretty considerably year over year. So the business is struggling. The restaurant business is holding on pretty flat, but when you look overall, it's not that great a picture. It's just that relative to expectations, Cracker Barrel is actually doing fairly well. And so that instance, we're saying, well, maybe it could outperform the market, but when you're looking at a falling market, it might just mean that Cracker Barrel is going to fall less as opposed to necessarily rise upwards.
Okay, so then it does not mean that the indicator is telling you there's now developing a select group of retail stocks that are worth considering investing in.
Not in most cases. I mean, there are some exceptions. A good example is AutoZone. And the only problem I have with AutoZone is really its valuation, which the Zacks rank does not calculate. But AutoZone yesterday had some blowout numbers, and it's important to put it in perspective. When we look at where the stock fell to in mid-November, we had a big slump. Shares of the stock had risen by more than 50% heading into earnings yesterday. Company beat around midday. Shares of the stock were up another 8%. The stock closed at a new 52-week high. And there's an example of one of the rare retailers that's actually doing well in the current environment. In fact, a lot of our parts retailers, O'Reilly, Advanced Automotive Parts, they're all doing well. And it's really the opposite of what we're seeing affecting the retail economy. In most places, we're seeing people cut back on their spending, becoming more frugal. If you're an auto parts store, however, you're looking at people looking at their car going, you know what, it's a 2002, I'd like to get a new car, but maybe I'll spend the maintenance necessary to keep it running, and that's benefiting those companies. We do have a few other exceptions, such as GameStop, which actually came out with some good guidance recently. But overall, when we look at the retail sector and you look at some of these earnings surprises, it's important to realize a lot of these companies are just doing better than what the lowered expectations said they would. And even when they're giving good guidance, it's really relative towards expectations, not a sign that things have actually improved in the retail sector.
All right, you mentioned a few stocks there. Do you own any of them?
No, I do not.
You can actually read Charles' latest dissertation on the retail sector. If you go to Zacks.com and you scroll down about midway down the homepage, and you can see the headline under the industry rank analysis green banner there. Click on it. It'll take you right to his latest article. With Charles Rotblatt, I'm Terry Ruffalo.